Technology, diversity, wine, the redwoods, and everything in between. Welcome to the Northern California Bay Area, and one show takes you inside the real estate that makes it all happen. This is By the Bay.
Hey everyone, welcome back to By the Bay. I'm your host, Dan Anchetta, and today I have two of my amazing loan officers that work for Sequence Mortgage here. Aliya Hanson is here, and Hannah Escher is here. They've been with me for, how long have you been with me now, Aliya?
5 going on 6 years.
That's crazy. Like almost 6 years. And Hannah's relatively new to the team,
Yes.
right? Like 6-7 months in. But both really experienced loan officers. And I wanted you guys have you guys on the show because this is we're in early December and wanted to talk about what's going on in the market, how we're helping clients, and mostly hear from you guys. Because mostly I do like listening back to old episodes. Like I do a lot of talking. Today my goal is to do less talking. So Aliya, will you introduce yourself? You've been on the show before,
Yes.
but it's been a little while. So introduce yourself to the audience and tell them what you do and so on and so forth.
Yeah, my name's Aliya Hanson. I'm born and raised in Petaluma and mainly focus on the Sonoma County, Marin, East Bay market for lending. I also have my license in Oregon, so I do a bit up there. Came from a real estate family. My mom's a real estate agent. My dad's a real estate attorney. My sister's a real estate agent up in Oregon. So yeah, it's kind of in the blood. And my background was luxury weddings. And then Dan convinced me to come sit in the office with him one day, and I never left.
Well, the backstory there is that it was during COVID, right?
Yeah.
So like your entire industry shut down, and we've been friends and for a long time. And I was like, hey, since you're doing nothing, you're just walking your dog, and you painted your house,
literally walking
and like
all
painted
the
your
time.
house, and I was like, come check it out, and at least like just come see what it's like. And then I don't know. I think a week or two after that, I hired you as an unlicensed assistant, right? And you were like,
I think it was like a week
later.
Yeah.
And then you went and got your license. And then you were like my assistant for a year or so, year and a half.
Probably so.
Because it was really, really busy with those low
It was
rates. And it
crazy.
was like we were doing, 250 transactions, something like that. It was nutty.
Crazy.
More than that. Anyway, the point is, and then now you've been on your own for a number of years, and you actually, congratulations, made President's Club.
Thank you.
First time.
Thank you. Yeah, it's been
That's a
exciting.
threshold of volume funded of over 25 million for the year. So congratulations on that.
Thank you.
Big accomplishment. You get to go celebrate in Mexico. Awesome.
Can't wait.
Yeah, congrats. And then Hannah,
Exciting.
yeah, exactly. So you recently joined us from another local mortgage company. And how long have you been in the industry now?
So I've been in the industry since about 2021.
Okay.
So I kind of came in at that tail end of COVID. I wish I knew the opportunity that was there at that time, but it served me well actually with how I've been focused on purchases since the beginning because I'm still in business. So grateful.
Yeah. There's a
for
lot of
that.
folks who got
So-
away from the purchase business
Yeah.
and started only doing refinances.
Yeah.
And then like those stopped. And then they're like,
Yes.
hey, I have no referral partners.
Right.
And they kind of had to start over.
And so that was my perk of coming in at kind of the tail end of it. But, had I known what I know now, I would have been trying to get all those refinances for sure.
Yeah.
But
You probably have another window here.
yes, that's what I think so. I think so, exactly. My background is in media and television. I was a producer, director, editor for about 15 years and was interviewing with some of my dream jobs in production management in 2020. And I just felt like, the hours that you're expected to do is usually 50 plus hours a week. And I didn't have my baby yet. And I was like, I want to have the baby at some point and be able to see my baby.
Yeah.
And so I just bought my first home at that time. And my friend had really encouraged me, was like, hey, you should look into doing this. And so I started looking into it. And I just had such a great experience with purchasing my first home. And I come from a family background where, there wasn't a lot of education around that. And so being able to get educated on it and see what was possible really inspired me to switch careers. And I am so happy I did.
Awesome. Well, we're really, really, really thrilled and grateful that you chose to join Sequence when you did, and
been fabulous.
looking
I'm very
forward
happy to be
to
here.
You getting President's Club next year. Yes,
Yes,
make
speak
it happen.
into existence.
Absolutely.
You've been such a fun addition to our team too, and just
Aw.
like I feel like your skill set, it just like melds with
Yeah.
what our mission and what we do. It's been so fun to
Oh,
watch
thank
you in this
you.
position.
Well, it's been really great joining the office. I feel like, after COVID, some of that support kind of was dwindling with rates where they've been, and it just feels like so much support here
Yeah.
and such a great work family.
It's something that, yeah, thank you. So one of the things that we've tried to do really well here is to like maintain our support levels even as volumes oscillate, right?
Yeah.
So it goes up and down. Sometimes we're really busy. This month is not particularly busy, but we've like kept the same level of support because when we do get busy, we want to have like all of our team ready to go, hit the ground running, take advantage of rate opportunities. It sounds like there's more inventory coming on the market early next year, and like we're going to be busy,
Yep.
right? So it's like
Yep.
you have to weather the storm. And like from the management side, for me, it's like, hey, I don't want to play this game of like we don't need a processor this month, but we do next month, and then we got to hire someone and train them. And
Right.
are they good, or do they meet our standards? Are they like kind of do they get our company? Right. So it's like we try to keep the same consistency as we go and weather the storms or the ups and downs. So anyway, what I really want to know from you guys is like you're each doing your own unique thing in the market and you're playing the same game but differently, right? So like I want to hear like what are you doing, Hannah, that's helping you win, because you put up some massive months in since you've joined us, right? So like how are you, like tell us about what the type of clients you're helping, how you're differentiating yourself from all the competition out there, because there's not that many deals going around, and I feel like all of us are getting a disproportionate amount of business. Like
Yeah.
we're getting more than what is really like allocated per loan officer, right? So like, what are you doing differently than what you're seeing else in the market?
Well, I do think it is a tough market, right? There's no way around that. It's unique. It's challenging for lots of people. And I think one of the things that I really try to focus on, which I feel like really helps me, is there's always someone to help. And when I focus on that, when I'm looking for who's the person who needs my help, versus thinking about the numbers, I think that really drives me to find those conversations or ask the right people the right questions, maybe to get a referral, right? And so that's kind of where I start, is making sure my mindset is on who needs my help right now, who can I help? And then from there, my thing is follow up. That is my biggest skill set, I feel.
And like often overlooked. Like the stats on it is
It's just-
crazy. Like how people like will get a lead or
Yeah.
or an introduction and they follow up once or twice and they're like, oh,
Yes.
they didn't call me back, so I guess that's it.
Right. And I mean, one of the biggest, I think maybe my biggest loan this year was someone I've been talking to for over 2 years. And it's just that consistent follow up and asking, being there to answer questions. So that's really, I know that's my superpower. And so I really try to lean into that.
Yeah.
Is, who do I need to talk to today?
Do you
Who
have a
might be
system that you
needing something?
use? Kind of tell us how you're what you're
so
doing.
I do organize all of my leads who have not done a transaction with me yet, and then all of my closed clients, and I'm constantly looking over that list of closed clients and leads, and keeping track of the last time I've connected with them. And I really try, with the leads especially, just try to make those connections super simple, just letting them know I'm checking in. If they have any questions, they don't need to answer me back, kind of taking the pressure off, but making sure they know I'm still here when they
Right.
need me. And then my closed clients, and I do this with my leads too, I have an email newsletter that I send out about once a month. I try not to spam people, but I really try to put in very data forward information, so that when people read that, they feel like they got a really good, quick bite of what's going on in the market, what might be helpful for them now or in the future. So I'm very information based when I'm talking with people, but the follow-up is really my key. And so I'm so grateful for everyone who engages with me with that follow-up. And of course, there's people where it's just like, they're not going to respond, and that's okay. But then I know I did my part.
Totally.
Yeah.
Yeah, I think like when we were designing like our flow here,
Mm-hmm.
like one of the things we had in mind was we want our loan officers to be spending as much time doing the things that drives business, and supporting them with someone that has file setup and a really skilled processor, so that you don't have to spend a lot of time like digging through your files. Like you still have to work your files, but really, there's someone else that really is there to support you once you have a live file.
Yes.
Because like you said, the difficult part, in my opinion, of the industry is like having the proper number of conversations. Right? Like you have to have enough conversations to drive enough, pre-approvals, to drive enough offers and close contracts. The actually doing of the loans a lot of times is not that difficult. It's actually the easiest part. It's really like, how do you communicate with the clients and educate them, keep them, with you, because they're going to get spammed by 10,000 other lenders and, trigger leads and all these other things that we battle every day. So like, how are you having enough time to add enough value so that you have referral partners and clients who love you, that stick by you, and are going to complete the transaction with you.
Yes.
Right. And Aliya, I think you do a really good job with that. So like, kind of tell us about your method. Like, how are you differentiating yourself? Like, with the education forward is really your thing. So like, kind of walk us through your process.
Yeah, so I'm really big on educating people about the investment they're making. A lot of people will be like, I found the house, now I need to get the mortgage, and that's just not how my business works. I do a 3-step first-time homebuyers education series with every buyer I work with. I do have, it's funny, we were talking about this market now, we have a lot of people who are finding the house and, oh my gosh, I need to get pre-approved. So I have to like shrink that education process and move through it quickly. But I typically spend 30 to 45 minutes educating a buyer before I even have them do an application, because I think it's so important. There's so many unanswered questions. They're, totally new to this process because, one, it's the first time they're doing it. And even if it's not the first time, people only do this like once, twice, maybe 3 times in their lives. So it changes every time they do it. Right. So I think educating buyers on what they can do versus just like the vanilla what they see on the internet is really important to me. And I wish I had that education when I was buying my first home, which is why I lead with that. And so we start with the education series of answering questions, getting to know them, understanding their goals. Once I see the application and I know their goals, then I can kind of hone in on what loan programs will work for them, because it might not be what they thought it was because they don't have the knowledge of all the loan programs we have available to us. So then we go through all of the loan programs I think that'll work for them at each price point. They go shopping, and then I do a 3rd step once they're making an offer on that home. Okay, now we found this particular home. Here's 4 different ways to buy this house. What serves you best today and into the future? Right. So really kind of leaning in on what's going to work for their financial situation.
Makes a lot of sense. I think that's, there's a lot of folks who like, hey, everyone gets a 30-year fix with no points, or everyone gets a 30-year fix with 1 point. And they just kind of have the standard thing that they do over and over again. And I think one thing because I've heard your presentation, I've seen it happen many times, is that you're like, I don't know the answer. I know lots of opportunities. It's really up to you of how much you want, what you want to do here. And sometimes I'm surprised on your deals what the client actually decides to do, where they're like, hey, we're actually going to put less down and buy points, or we're going, and it's like not the conventional way that we see most transactions happening. People like, I think we've conditioned the consumer to be like, points are bad, right? Like it's a bad thing to do. And it's like, well, sometimes it doesn't make sense to, it doesn't pencil out, but a lot of the times the really smart strategy might be to, with a limited amount of funds, to optimize like your down payment and buy the rate down, and you wind up with a much better interest rate and overall lower cost of borrowing. It's really interesting. I don't think a lot of loan officers take that extra step to really like analyze like the different scenarios.
Well, and also it depends on the property, which is why I do that 3rd step when we get to the actual property. It's not just like, okay, that was the $800K at 20% down scenario. It's like, it was funny when we just bought a house a few months ago and I walked into Dan's office with my mortgage coach prepared. I was like, am I looking at this right? Like, I can't client myself. And we found out the home needed a ton of repairs as soon as we walked in the door, and not fun stuff, right? Like insulation and a roof and tinting. And so I had Dan look at my and my husband's loan strategy because I just needed another set of eyes, and it made the most sense to
I
put
was
less down and buy the
surprised.
right.
I was
You were
super
shocked.
surprised.
You
I
were
was like,
oh my gosh.
Aliya, come on, this is not going to pencil. And you're like, let's look at the math. And I'm like, okay, let's look at it. And I'm like,
The math
you're right.
mathed.
It mathed, and this is the right
I'm gonna
way
say
to go.
it's hard to make math lie. That's why the numbers.
Yes, exactly.
And it was
they're the
funny.
best.
So it was like a strategy that I was thinking for myself totally changed based on inspections.
Yeah.
So yeah, it's ever changing in this industry, and a lot of people don't know all those options that they have.
Yeah. How do you handle someone that's like, I don't want to talk about, like, I don't want the education. What's your rate? Like, how do you overcome that objection?
Sometimes those just aren't my clients, and I'm okay with that. Like, I want people to be educated in the process, and I will I'm not just going to quote them right over the phone, because that's, it's based on what they tell me, and I'm going to write that down on a piece of paper that I'm going to throw away at the end of the day, right? Like, that has no weight to it. So if they have an application and they just want the rate, I'll show it to them. But a lot of times it's not a model match for me, and that's totally fine. Actually last week I had a client who, a few times this year, I've had clients who are shopping for rates, and I say, send me the loan estimate, because it's very rare that someone can beat our rates.
Yeah.
And one over the summer, the other lender was missing $7,000 worth of closing costs. I was like, can you imagine if you got 3 weeks in and there was $7,000 you had to find? Like, that's wild. And so a lot of times I'll tell my clients my numbers are going to look higher than everyone else's, because I'm preparing for the worst and letting you know that, like, it's going to get better, because it's not a good relationship for me or them if they come in higher.
Right.
And same thing last week, I had a client who was looking at another lender. He sent me the loan estimate, and I was like, okay, the things you're not seeing is that they're charging you over $2,000 for the same rate, where mine has no points. And also, they're missing about half of your closing costs. And it was a 3% down buyer. Like, they don't have the money for those closing costs. They're going to get to the closing table, and that lender's going to have an issue.
Right. I'm surprised sometimes I see the loan estimates come across, and I'm like,
It's so wild.
it's wild what people are told, and then what the LE actually says.
Oh yeah.
And I'm
just crazy.
I wish that there was, like, I don't know, higher level of ethics in a way with some of the competitors out there. And there's a lot of great loan officers out there that do it the right way, and like, I'm happy to cheer those people on and be like, hey, if you are presenting all the information up front and you're better, then so be it. Then I'm okay to lose to you.
Yeah.
And I'll tell my clients, send me the deal, and if it is actually better, I want you to get the best deal, so I'm going to tell you to go with them. Like, if I absolutely can't, which maybe happens once a year, like, if I absolutely can't touch what they're saying they can do, I'm going to tell you that.
We used to see it all the time in, like, the private banking world, and there was like some smaller banks, relationship discounts, and you're just like, hey man, I can't touch that. I just can't do it.
Hard pass.
Even if I take all of the margin, took all the profit out of it, I just did it for free. I still can't get there.
Totally.
So, you got to just take that deal and let me know that it actually closed.
Right, exactly.
So I think that's really important, that you're just like, hey, not every client is your client. And if you have, like, that hard rate shopper who doesn't want to talk, they just want to rate, like, you can take the time to educate them for a minute and hopefully show them some value. But if ultimately they want to go with the cheapest possible, and they don't care about the service, they don't care about the experience, that might not be a model match for you. And it's okay to move on from that and go find people who really appreciate and value, like, what you do and what you bring to the table.
Yeah.
Right. Anything else that you guys are doing differently in the market? You both have some incentives that you do for specific industries, right?
Yes.
So why don't you talk about that for a minute?
You go ahead.
Oh, sure. So I offer what's called an affinity program, which we all offer. And so my credits are based on employers offering that to their employees. And so it's a great program. Usually you have to have a specific amount of employees to qualify for that, but then we're able to offer a closing costs credit to all those employees. And then I also come in and do home ownership education, which I feel like is just a great benefit and at no cost.
So you're working with a specific
employers.
employer, right? And as a benefit to their employees, you offer them an incentive to utilize you for a home purchase or refinance.
Right.
And in return, you're offering them the employer to have you come in and do like lunch and learns and help educate their staff.
Exactly. And it doesn't cost the employer anything, which I think is great. And so I've been kind of testing that out with the employer that I have a partnership with right now. And in 2026, I'm really excited because I have quite a few other employers lined up that I'm excited to start working this program with.
That's awesome. Yeah, it's a great way, especially because employers want their employees to be sticky, right? They want them to like establish roots in the community and to like stay here and like need to keep their job and like continue to like pursue their goals and make their bonus and all that other stuff. And homeownership is one really great way to encourage that.
And it's such a great way to build trust, to really build trust with people and provide a service to them truly at no cost to them.
Right.
So then they see that value before they have to take that very vulnerable step of then asking for your assistance and giving all their information and everything, which, can be so scary.
Right.
And so it's a great way to help me be able to establish that trust with borrowers.
I think it's a huge signal from the employer to the employee, like, hey, we really care about you. Because what's like the number one expense for nearly every household is their housing expense. Right? So like, hey, we care about you and your well-being and like your future wealth building. So like we know this is valuable and we want to show you this tool. I think that's a really cool thing. And Aliya, you do something similar.
Yeah, so I do a first responder program because I work with a ton of first responders. I do a lot of firefighter loans.
Why is that?
My husband works in the industry.
Yes.
So I do a lot of loans for his current coworkers, his past coworkers. And so we do a program where we pay for the appraisal. So we take that cost on in-house. And then I also work with them. I'm obviously intimately familiar with their income structure. So talk to them about how to structure their payment in a way that I know works for them because I know how their income can fluctuate throughout the year. So yeah, we do pay for the appraisal, typically a little bit better rate, and work with them on making sure that structure works for them year round.
And that's all first responders, so not just firefighters?
Yeah, we do firefighters, police, nurses, teachers. I know teachers aren't first responders, but they are frontline.
Yeah, for sure. Absolutely. I think those types of programs are really important, and it's a way to, kind of have an incentive to have a conversation.
Yeah.
Right? Because if like you're going to buy a house anyway, like we should work with someone who intimately knows your industry, cares about what you're doing, and can like communicate to you in a way that you really understand. Right?
Yeah.
I think that's important.
Working with those clients, I've also like learned a lot of escrow companies who give deals to certain employers or certain retirement programs. So I'll always ask, it's crazy how many firefighters don't know that they're like few years with CAL FIRE when they started in the industry gives them CalPERS reciprocity. And there's an escrow company online that gives a 30% discount for CalPERS members, which is like
so if you're doing a refinance,
refinance a
or purchase, you could just pick.
And a lot of teachers are also CalPERS members, if they work for the state of California. So we also just work very closely on like digging through all the products that help save them money.
Yeah, it's really, it's really going the extra mile. I don't know. I don't think I've heard of any other loan officers who are like, hey, here's the title company that's offering you discounts. It's going to save you money because if we can save you, if the overall cost of refinancing is, $3,000 and you can reduce that by a couple $100, then like the break even point winds up making more sense. And like it's a really good tactic. It's really smart, really smart. Want to kind of pivot on to like how you're helping your partners, right? We all rely to a certain degree on referral partners and mostly real estate professionals, realtors, and other folks there. So like, how are you differentiating yourself? Because the best realtors out there are getting calls from all the loan officers in the community, right? Wanting their referrals. So how are you like working with your partners, and what type of partners are you like looking to work with?
Yeah. So, I kind of have if someone is a realtor partner and they are referring me deals, anytime they want to do any marketing together, I'm 100% here. How can I support you in that? Can I help you connect with the title company to get the lists you need? So I've tried to be very hands-on, besides, referring them clients when there's the right fit, because I also love to be able to do that, especially because they refer to us so much. But the marketing side for sure, and then providing any types of flyers they need for open houses that have the breakdown of the loan products. And then what I typically do with my realtor partners or any type of referral partners, I'll meet with them at the beginning of each year and kind of sit with them and make a strategy together on what they're hoping to do that year. And then I want to help as much as I can and support them in that process. And usually for me, because, we do have regulations and laws around how much you can be spending on certain things as a loan officer with your referral partners. So usually for me, a lot of that assistance ends up being, who can I connect you with? Who do I know that you might need, that I already have that established relationship with, that I can make this process smooth for you? And then, of course, during the pre-approval process, just being as available as possible and just really trying to go the extra mile.
Yeah, I mean, that covers a lot of the ground, right?
Yeah.
It's like you're there, you're present, you're listening, you're like, you care about their goals.
Yeah.
Like, I always like to ask my referral partners, like, what are your goals? Like, let's make sure that we're aligned, right? And like, what's important to you? What do you care about? And let's make sure that we like speak the same language, right? Aliya, what are you doing? Because you've been growing your roster of like A-level, like really great referral partners. So what are you doing that's bringing all those folks in?
It's really funny because it's like nothing marketing or like business like that I'm doing. I just like to work with people I enjoy. And that goes both ways. So like, my top 5 to 10 realtors that I work with all the time, like we'll be on the phone talking about a client and it's like 30 minutes later and we'll still just like chatting about our lives.
Right.
And so,
like you've created like really personal relationships with these people. Like the foundation is business, right? Like you're there to like work together and and help clients and be profitable and make money. Like that's like the foundation. But you didn't leave it there. Like you really engaged with them and got to know them as people, right?
Yeah, and I enjoy them all as people. And sometimes I'll be working in like someone I had pre-approved brought on a realtor, and I can just tell, like, we're going to do a great job through this transaction, but that's realtor's not a model match for me. And that's okay. I just enjoy to work with people I enjoy, and I think it makes the job more fun because you're just like working with your friends.
Right.
And if we're not enjoying what we're doing for work, then what are we doing?
Yeah.
So, I mean, obviously, like I do the marketing stuff, and I'll have realtors reach out and ask for a mortgage coach to show like the cost of waiting and what happens when rates go up and down and how does that affect your mortgage. And we do all of that stuff, but that's just kind of like second nature business. I also do first-time homebuyer seminars with a lot of my realtors. A lot of them are plugged into different groups where those first-time homebuyer seminars or move-up buyer seminars make a lot of sense for the groups that they're involved with, and so partner with them. Do like a lot of them are like 7 or 8 p.m. on a weeknight, so people can get their kids to bed, and we're doing it via Zoom to make it convenient for them. So I probably do like 3 to 10 of those a year, just depending on who needs what. And they've been super successful because there's not a lot of, especially the move-up buyer space, right? We bought our starter home. We have a sub 3% interest rate, but we're having more babies. We need more space. Like that market feels underserved for knowing what their options are.
Right. There's a lot of ambiguity there. Like it's not clear because there's a lot of ways to like handle that, right? And I think people think, oh, you have to sell before you buy. Or you have to make a contingent offer. Like there's so many interesting ways, to work through that. So I think that education's really, again, education first, right?
Do they keep their home or do they sell it?
Yeah.
Right.
Yeah. Here's
all
the
three of
numbers
us,
Yeah, we're all part of that house hack club.
Yeah, I mean, I think it's really good advice. I think it's an opportunity for us to provide advice to go like, hey, I own a rental property that the tenant fully pays the mortgage. It's building my wealth. You've both done that now. And it's like, this is really important because someone else is building wealth for me, right? And it's like, that's such a like interest. Like, if you can make it, if you can make it work, if you can figure out a way to like buy the new house without selling the old house, and you keep it as rental and it cash flows, like that is like such a gift to be able to have in your portfolio, right?
We always joke like, you know, my husband has a pension, and we joke that house is my pension. When that's paid off, like I can retire. Additionally, it's also like kind of a safety net. But it's like, okay, worst case scenario, we just offload that house. Like, you know, hopefully we never have to do that.
Never have to do it, but you have this asset that's worth something, and it's not like, you know, some ambiguous thing. It's like it's a house, like, and it's in town, right? Because yours is nearby too, right?
It is,
yours,
it's in Sonoma County,
right. So like, I've always been afraid, maybe it's just my own thing, of like buying an investment property where I can't just drive by it. I don't know what it is. Like, I've looked at opportunities in other states and like, oh, hey, look, this is cash flowing and it's not a ton of money. But there's something about being able to like drive past our rental and be like, oh yeah, I got to send the gardeners out. You know, like that's really, that's really meaningful. Or like when something breaks, and it inevitably does, like I can go by and take a look at it to make sure that the work's being done correctly.
It was funny. It also made like moving out of that house less emotional because like that's our first house we bought together. We got engaged in that house. Like we got married in that house, and like all of these lifestyle things happen there. And it's like, it's still a part of our lives. Like we were walking out the door and felt so good that the tenants moving in were so excited to be in that space. And it was just like warm and fuzzies to like see that being passed on to someone who's having all of those experiences in that space that was special to us.
That's awesome. Yeah, we you know this, but we bought our new house and then we lived there for a few years and we remodeled it, and then at the time period we moved back to our first house, and it was actually like really fun, like moving back into our old house, and it was like going back home. It was really great. But it is interesting, like going, because you just moved like couple weeks ago. So you're still unpacking. Like when you go back to your first home, like a year or 2 years from now, and like someone else has lived in it and it's kind of less yours, it's a weird thing. It's a weird experience, but then like you still have all these memories of like, you know, spending time there, and like for us, it was like our first baby was born there, and Meg was pregnant with our second when we bought. Anyway, so really good memories and kind of a cool way to keep it in your life. So
absolutely.
So I want to talk about what's going on in the market, and kind of like pivoting now. We've kind of going to I have my list, right? So like the market's really funky, I think, right? And we've been saying that for so long, and you know, I think with today's December 3rd, so we just had the jobs data that came out. The ADP report came in way low. We were expecting like 30 or 40,000 new jobs to be created, and there was less created, or I forget exactly what this was.
30,000 less, I think.
Yeah, it was like we lost 30,000, and they're supposed to grow by 10 or 40. So it's like a 70,000 job miss, which is adding more data, because the Fed chair has just been really adamant about is a data-driven decision. It's not going to be swayed by politics. He's not going to be badgered into lowering rates. But, you know, with this data, it's like this is a pretty weak job report, right? So it's likely, very, very likely that we see another rate cut next week when the Fed meets. My personal opinion is that that's not going to change interest rates, that mortgage interest rates are going to kind of stay where they are. I don't see this being like the thing that tips it so that things are going down into the fives. But we're like kind of reset into the mid to low sixes now, where before we were like high sixes, low sevens for a number of months. So like crystal balling here, what are you seeing in the market with your clients and your referral partners? And what do you think happens in the short term, meaning like 3 to 6 months from now, like leading up to summer, and then like fast forward to this time next year, what do you think the market is? And it's a big question, I know, and I'm not going to, I have a new policy that when we make predictions like this and we're wrong, I'll just delete the episode. So.
We should just put a big crystal ball in.
Yeah, exactly.
Like all of the big banks just came out with their interest rate predictions for the next year, and I also house appreciation, and it seems that we're going to stick in this mid to low sixes range for a good year plus, at least, is what everyone's predicting. But that home prices are going to increase still. It'll be a smaller increase than we saw 5 years ago. But I think market data nationwide is very different than our little pocket here in Sonoma County because it's so desirable, right? Mm-hmm. Like everyone wants to live here. So we typically continue to see that upward staircase of home values. But with rates predicted to kind of remain where they're at, not fluctuating hugely, nothing more than 0.5%, then it's kind of just like, well, if home prices are going to go up, we should make moves before that happens if it works for your financial situation.
Right.
Yeah.
A tale as old as time.
I know. It's the same. Yes.
Yeah. And I mean, I think, it's hard for consumers to understand what these rate cuts mean. A lot of times I think that's where we all come in, where we can help them really understand what that means for them. And the data, because rates are so tied to the 10-year bond, right? It's like rates really move off of that, which moves ahead of a rate cut. So I feel like, the prediction is if a cut is coming and the market has already priced that in, that's when clients should be looking to make a move. If they can't, right? If it's a refinance, you're waiting to lock it, right? If you're purchasing a home, that's where it's more like, you kind of don't want to be waiting too long to lock something because you don't know what's going to happen. But if you are at the right moment in time, great. But I think like what Aliya's saying, I think with rates remaining around the same, and I do actually think they're going to move up a little bit in the beginning of next year because historically that's what they've been doing. It's like they kind of dip in the fall, when these rate cuts are happening, they move up a little bit going into the beginning of the year, and then I think rates are going to kind of level there, and then once we get back around to this time of year next year, maybe August, September, maybe we'll see another dip.
Yeah.
And that's been the pattern. And I think the Fed has been really clear and intentional about not making any moves that the market can't predict, because I don't think they want a big swing happening. And I think they've done a really good job of being in tune with that. So I do think we'll see a 25 basis point cut next week. I think rates are already pricing that in, especially with the employment data that came out today. It's like, today might be a good day.
We both just talked about as soon as this is over, we're locking our clients. We're
probably going to be locking some people because those are the things that move mortgage rates, right? So I do think, though, it's like we need to stop waiting. If you want to buy a house, if you want to refinance and the numbers look good, it's unlikely those numbers are going to change very much. Maybe they might even get worse. So if they look good to you now, it's like, well, maybe now's the time.
I feel like a broken record with my analysis, but I think the opportunity, so two things. For home buyers, buy the house when you find the right house, right? It's very likely that in the near term, there will be an opportunity to refinance down. It looks like the economic data is suggesting that rates should move down into the 5s at some point in the future. If you lock with something that's a 6.5 or whatever, it's very likely that you'll be able to refinance down into the 5s sooner than later.
Absolutely.
Right?
Yeah.
But really, make sure that you have a strategy, that the payment works for you, that the house works for you in the near and short term. And that's the most important thing.
Yes.
Number one. And then I think for people looking to refinance that may be in the mid to high 6s and are just not quite there yet to make the refinance make sense without paying a bunch of points and doing the thing, to have a loan application submitted and ready to go. Because as you're saying, appreciation is going to continue to go up, maybe not 10%, but 2-3%, which means if you have a situation where you've paid down the principal of your loan and you have mortgage insurance, that if the home value goes up and your principal goes down, that not only can you take advantage of a lower interest rate, but maybe you can eliminate the MI or have a much significantly reduced mortgage insurance. That's all positive. But I think that we're going to continue to see these really brief windows of there's a week where there's some really bad economic data that comes out and the 10-year treasury plummets and rates go with it, and take advantage of that window. We've seen it happen twice in the last year, and not as many clients as I thought would take advantage of it did, because they are expecting like the 4% rate. And I'm like, guys, you might get there eventually, but not
give it 10 years.
but not in one swing, right? So like, let's take some money off the table and let's take you from 6.75 to 6 1/8 or 6%.
Right.
And yes, there's a cost of doing that, but like, there's no guarantee that rates are ever going to go down any further than you know, that where we are. So I think the really smart strategy is to have a conversation with your loan officer and to say like, hey, this is my goal. My goal is to get to 6%, because if I get to 6%, then my payment is $400 less per month, and that's a good like chunk of cash to take off the table. It's a car payment for
Yes,
a lot of people,
absolutely.
right?
Yeah.
So and to have like your loan file set up, ready to go, and to like verbally give them permission, like, hey, if you can lock me at 6%, trigger the loan and lock it.
Yes.
Yeah.
And let's go. And then obviously they need to follow up with some documentation, because we don't know when that window is going to actually open. But I think that's a really, really smart strategy that home owners currently should be utilizing. And if you don't have that, like, please reach out to Hannah and Aliya, like have a conversation with them and get yourself ready to act. Because again, earlier this year, there was a window of 4 or 5 days, maybe. And then
It's short.
And then last October, September, October, there was like literally a 2-day window.
Yeah.
And I think I locked like 5 clients in that time. And then a lot of people called me, 3 or 4 days after rates went back up, and they're like, hey, we're ready to go now. And I'm like, hey, but that window's closed.
Yeah.
Like, the economics don't work anymore. And I wish I could do something, but the market moved quickly. There's nothing I can do. So like, being ready is maybe the most important advice I could give to current homeowners. Right. So like,
You're so right.
yeah, like 6.5, 6.75, anything north of that, like you really should be like primed and ready to go.
Yeah, because it is so fast. It's like, sometimes it's like a day.
And honestly,
And
by the
so-
time you get done rate shopping and calling a bunch of people and having them get back to you, because everyone else in the world is also doing that,
Right.
you might have missed the opportunity.
Yes.
Absolutely.
Yeah. So like, pick your person, figure out who's going to help serve you best, and like do it.
Yeah.
So anyway, all right. So I think we're on the same page about predictions. I think the other big thing is like inventory. I think how many clients right now in your like pre-approval bucket are move-ups that are waiting to list their current home? I mean, I don't need an exact number, but
Yeah, I have a few waiting till spring, but I also think like this time of year is a really good time of year to
It's such a good time.
get a deal on a house. People kind of check out for the holidays. On the flip side, you have really serious shoppers. I have clients who just got into contract contingent on the sale of their home. Their home happens to be like the sweetest bungalow right in the heart of downtown Petaluma. That's always going to fly off the shelf. And they got a sweet deal on something that's been sitting for a month and a half. So it's really interesting because they'll still get those super serious buyers that have been waiting for exactly what they have. And they were also able to make a really good investment on their next home. I think we have a few programs that we use. We were just talking about it in our operations meeting yesterday, that allow our clients to buy something now and give them a little bit of leeway to be able to list in the spring, give them a little bit of time to be able to come on the market right when they want to. So I think those are really cool options. But yeah, those move up buyers, I feel like they started shopping in like 2023, 2024, and they've just watched price points pass them by.
That's what I've seen as well. And the move up buyers that I was helping the most were already situated now, because the summer was really when the time that they took that opportunity, because they were putting their house on the market, were able to find other homes, and so now I have a lot of people that are first time buyers, or maybe they are a move up buyer but they're keeping their home, and so they're just looking for that right next home, and then they'll likely rent out the home that
That's a great, like I
currently
said,
live in.
great wealth building
Yeah.
exercise there, and to like run the math and show
Exactly.
them what's possible for them.
And so in those situations, though, I typically always will do a pre-approval multiple ways, where it's like, this
Absolutely.
is, what we know you can do if you keep your home. And then if on a whim, you're like, hey, well, this is the one I want, and the only way to make it work is if we sell this one, then we're like, okay, we're prepared for that too.
Right.
So,
Yeah. Again, I think it's another one of those exercises of being prepared.
yeah.
And if you're like, I talked to a client yesterday, like they have a condo, it doesn't work for them anymore. And I'm like, and they had a specific house in mind, and we ran the numbers and the budget just didn't work for them. That was out of their payment comfort level. But I'm like, hey, we still need to get you fully ready to go, because whether this is the right house or not, what I do know for sure is that your current house is not the right house for you. Right?
Yeah.
So, and that's okay, but let's figure out what the strategy is to help you get to the house that really makes sense for you and your family. And I think they appreciated that, where it's like, hey, there's no pressure. Like this particular house that you called me about, maybe that's not the right one.
Right.
That's okay. But we still need to go through, take your application. I want to educate you about our, buy now, sell later programs that we have, and other bridge loan options and other interesting ways that we can help you move the equity from your current home to your new home without having to sell first, right? If that's an opportunity. But also talk about like, hey, here's an opportunity if the market's not really moving that fast, to make a contingent offer and give yourself, the luxury of getting into contract on something and then selling your house. Like that's, if the market is not going nuts, right, then you can do that. Or if you're
Yes.
targeting
Yes.
houses that have been on the market for a month,
Yeah.
like you can strategically do this and make it make sense without having to use any of these special tools, right?
And
So
it's such a good time to buy.
I think so.
Oh my
I mean,
goodness.
like it's I'm
I'm
looking
like, I
at the
wish
days
that
on
I
market.
needed to
Yes.
buy something right now.
Looking at the days on market, I'm like, there's deals to be had,
Yes.
right?
Yes.
And like, I always tell clients, I'm like, what's the worst that can happen? Like,
We
make
play
it,
this game a lot.
make an offer.
Worst
right?
case scenario.
Worst case scenario. Make an offer. What's the very worst thing is they say nothing and they just don't respond to you.
Yeah.
Okay. And if they say no, or they counter back to you, at least you've made an offer, and you can test the market and see what they're willing to take. But there's no harm in making offers. I don't think that you should go offer $100,000 on $1 million listing. Like that's probably not
A waste of time.
probably not worth your time. But like, what are you willing to pay for it? Present that offer and see what happens.
And on that point, Dan, it reminds me of one of my colleagues. She had told me about when they were purchasing their home, the first offer they made was only a couple $1,000s more than the offer that ended up being accepted. And the sellers rejected that first offer. They went back in just, a couple thousand under again, and then they accepted that one. So it's like, you never know. You never know the timing, like
Yeah.
you're saying. And
I've
the worst they can say is no.
I've had plenty of situations where the seller initially is like, I'm not taking that offer. And then a week goes by, and then another week goes by, and then they're calling that agent back and
Are you
going,
still on
Yeah.
the table?
is your client still interested? And they're like, yeah, actually we haven't found a house. And then they actually get a better deal
Yeah.
than what they originally offered because they've tested the market. And that's okay. You got to test the market as a seller and see what you can get. And no one's going to blame you for trying to maximize
course.
your profit on your investment.
Of course.
Yeah.
Um,
And
but
I
yeah.
think also showing our clients like, okay, this offer might be a little bit lower than what they will accept, and here's where your agent thinks they will accept. So showing them already showing them the numbers on the difference of like, okay, here's where we're going in, and here's where I think the seller's going to sign on the dotted line, so that they can just be quick with that and be like, yeah, okay, like we already know that works for us.
Yeah.
Like
Preparing
we'll take
them.
it. Yeah.
Again, like you've mentioned Mortgage Coach a number of times, and it's a great tool. And
Yeah.
if you're a loan originator and you're not using Mortgage
You
Coach,
should use it.
get on it. It's such a time and lifesaver. But like showing like, hey, you're offering $680 when the house is listed for $725. My bet is probably going to settle around $700. So let's just prepare you to show you what that looks like ahead of time, and show you what the incremental $20,000 looks like in a monthly payment. And it's usually not that. I mean, it's not that much.
And going back
Especially with these prices.
Yeah.
Absolutely. And going back to like, how are we helping our agents? Like, doing that forward thought for them so that they don't have to come back to us. Like
Yes.
a lot of times agents will text me and be like, the counter is this. And I'll be like, great, the client's already seen that. Like, go nuts, have the conversation with them. They're prepared.
I like that. Go nuts. Have fun. They've already seen these. They've already seen these numbers. Let's just make a decision and get this thing done before another offer comes in or something
Right.
else. So just want to conclude with like, I want to hear like your best advice for someone who is like thinking about maybe it's time that they buy their first house. I know a lot of our clients, looking at the data of who our clients are, a lot of like younger couples, a lot of people who are planning their families, a lot of people who have moved out of the area, worked, and then they're coming back to the area to like settle in and establish their roots. So if we've all bought houses here and kind of growing our families here, tell us like, what's your best advice for someone who's in that scenario where like, I'm not sure if I'm just the right time, maybe I'd like to own a home here, but all I hear is that you can't afford a home in Sonoma County. Like, what's your advice for them?
Go ahead.
Sure. Well, I think it's really important to remember that your home is an investment. And especially in this area, it tends to be a very good investment. And, we're talking about appreciation, even in the small numbers at like 2 or 3%, even 1%. That's a lot of money when you're looking at the price points of the homes in this area. So I think, having that understanding of this is an investment. So the less time I have in that investment means the less I get to take advantage of that growth. It's just like the stock market, right? If you started contributing to the stock market in your retirement account when you were 10 years old and now you're 40 or 50, you're going to have way more in there than if you started when you were 30 or 40, right? So I think starting at that baseline of let's, shift the thinking a little bit. This is also the home you're going to make memories in and, be happy and grow a family or, whatever your goals are. And let's really make sure we understand the investment value of this, because I think that's what helps people take some of that fear away of, well, it needs to be perfect or it needs to be this or the rate needs to be this. I love that saying, marry the house, date the rate. And I think that is such a great way to kind of encapsulate that mindset of like, yes, this home is going to provide me with so much incredible personal value. And I also want to be smart about trying to get into that investment when I can, if that's your goal. It's not everyone's goal, and that's totally fine. If that is your goal, then, let's be serious about it. Let's figure out how we can make it happen for you.
Absolutely. I think, being prepared early is, I think, so valuable in this industry of knowing what you can do, what works for your finances. So having those conversations early so you know what you're looking for, know your price point, know your monthly payment. But my favorite advice that I give every first-time buyer and every move-up buyer is practice making your mortgage payment to yourself. So if your rent is $2,500 and you think you can afford $3,500 in a mortgage, every time you pay your rent, move $1,000 to your high-yield savings account and practice that and see how it feels. Is it too much? Is it too little? Can you, grow that a little bit, and then we can grow what purchase price you can afford. So by the time you're starting to make that mortgage, you've already been doing it. Like, your lifestyle doesn't adjust. Not only are you saving more for emergency fund or down payment or whatever it might be, but I think preparing early and practicing that is so helpful. And it's how I've bought my homes, knowing what we can afford in that. We backed into by practicing making those payments. And every time I say that to someone, they're like mind blown by that advice. Yeah, I'm like, well, if you say you think you can afford $5,000 a month, like, practice that. Let's try it. And I think that's, to be doing that, whether it's 3 months or 3 years, is really helpful for people.
So make the adjustment before. That's really smart. Really, really, really great sound advice. And like, again, it's like this little hack for someone to be like, how much can you afford? Well, I think 4,000. Okay, well,
try it.
And it helps you save money at the same time.
And if that's easy for you and you can make more adjustments to your spending and so on, then maybe the budget can be higher, right? Yeah, that's really great. Anything else comes to mind in terms of like wisdom for home buyers?
What's your best advice that you're using right now?
I think for me, it's really about like this never too early to start. And like the sooner you get connected with an expert who can like show you how it works, the better. Like even if you're 5 years away from buying a house, like the consultation doesn't cost anything. Take 30 minutes to learn about it, just like you would about, I don't know, I feel like we're researching every single purchase that we make. You're looking at the reviews on Amazon. You're like, you're like Googling and looking on Reddit to see what people think of everything that you buy these days. Like everyone does that, right? So like, why don't we do that when it comes to buying a home? Like do the research early, have conversations now, even if you know for sure that you're not buying a house next year or the year after. Just get the education, learn. Because a more educated home buyer is a more successful homeowner, right? And a lot of times I think we wait until, like you said, the very beginning of this conversation is like, we wait for, we found the house we love and we can't imagine our life without it. Now, how do we afford to, like, how do we actually buy it? And at that point, it's almost too late to get like enough education to make a difference. Like we can still help you. We'll still like do our best to get you through it and educate you along the way. But I think our most successful home owners are those who started early in the process and took the time to ask lots of questions, even if they think that they're dumb, and like, let us help you. Like we have done this so many times. You're going to do this 3 or 4 times in your life, maybe. Right? So like, we're closing 25, 30 loans a month. Yeah. Right? So like we're helping that many people. That's how many times we've gone through this month after month after month. So let us share our expertise with you so that you can have an easier time in your own individual process. I think that's been the same advice I've been giving for a long time.
Yeah. But it's great advice. It's always the right advice.
Start early. And find someone who really like cares and has mastered the craft. There's lots and lots of people who can make you a mortgage. There are very few people who know how to explain it in a way that makes sense and like will take the time to educate you. And if they're not willing to like sit down with you for an hour, then they don't deserve your business. Does that make sense?
Yeah.
All right. All right, cool. I think this is like a plenty long podcast episode. So we have loans to lock. We got stuff to do. So thank you for being on the show. It's fun to have you guys here, and appreciate everything that you've done to grow the Sequence brand. And congratulations on all your success. Looking forward to seeing what you all do in the future. Thanks for being here.
Thanks for having us.
Thanks,
For sure.
Dan.
Stay up to date with Bay Area real estate. Hit subscribe now if you haven't already. Did you enjoy this episode? We love reviews and